Okay, hi, I'm Mr. Simons and I'm trying something a little bit different today. It's now 2:28 on 7th of May 2019 and we're just about 2 minutes or so away from the RBA's decision in terms of interest rates in May. Now we're only 1 minute away. If you can hear a noise in the background, I think it's the urn going off. Anyway, so we've got 1 minute. Economists were pretty much split on whether the RBA would cut the cash rate. You can see at the moment the cash rate is 1.5% with only 1.3% inflation in the Australian economy. So economists are thinking, maybe the RBA will cut further, maybe it will sit tight and not change rates. So I'm doing this live. I think cash rates will stay on hold for the month of May. I think the RBA will still wait and see in terms of what's happening with the Australian economy. Reasons why the RBA might cut the cash rate, I've just got an eye on the time, who knows when it's going to change. The reasons why it might stay put, that economic growth, what's happening, global growth, we're not sure what's happening. But the reasons why it might move is because inflation is so low, because economic growth is a bit weak. All right, let's refresh. Here we go. Reserve Bank policy decision, 2:30. No, nothing yet. Cash rate is still 1.5%. 8th of May. There we go. Cash rate is on hold. See here, 8th of May 2019, change, no change. Cash rate target remains 1.5%. Okay, so I was right. Fantastic. Let's have a quick look at the statement here. So this is what the RBA produces every time it meets and makes a decision, even if that decision is no change. So you can see here, date 7th of May 2019, which is today's date. So it says here, at its meeting today, the board decided to leave the cash rate unchanged at 1.5%. That's fine. Look, the outlook for the global economy remains reasonable. Okay, but the risks are tilted to the downside. So it's saying that the risks are the global economy gets worse. Check out this, growth and international trade has declined. Investment intentions, so investment plans have softened. Okay, global financial, risk premiums are low, long term. Australian dollar is at the low end of its narrow range. So the Australian dollar is low at the moment. So here is an interesting point to think about, that the RBA reckons that the Australian economy is thinking that the Australian economy will grow by around 2.75% in 2019 and 2020. Now that's quite low. That if we think to the economic issue of economic growth, the goal there is like 3 to 4% growth. This is pretty low, but this outlook is supported. So there are positive signs by increased investment in infrastructure and a pickup in activity in the resources sector in response to increasing the price of exports. So this is good news. Commodity exports are picking up, but the domestic uncertainty continues to be the outlook for household consumption, right? So the RBA is worried about household consumption, and that could be a big risk for the Australian economy. Remember, consumption is around about the value of 2/3 of GDP. Let's have a look here. So the RBA is optimistic on the labour market. Significant increase in employment here. So the reason that I'm stuttering and not going well is this is the first time I've had a look at this right now. So can you see here, despite the positive developments, there has been little further progress in reducing unemployment. The unemployment rate has been steady at around 5%. And expected to decline to about 4.75 in 2021. Okay. A problem in the Australian economy has been that low wages growth. You can see here the RBA is like, well, we might expect some lift in wages growth, but it's going to be gradual. Let's have a look. Inflation data for the March quarter were noticeably lower than expected and suggest this is a good phrase to use in your essays and short answers, talking about subdued inflationary pressures, so weak, that the price pressures are not there in the Australian economy. Over the year, inflation was 1.3%. In underlying terms, 1.6%. Important thing to note about these two is that both are below the RBA's target band. So we are below that main measure of where the central bank would like inflation to be. Can you see here that underlying inflation is only expected to reach the bottom of the target band here in 2020. So all throughout the rest of this year, 2019, the RBA expects inflation to remain below that target band. So this is the real important part here in terms of why the RBA did what it did. Can you see here the board judged that it was appropriate to hold the stance of policy unchanged this meeting? When it says policy, that means monetary policy, because this is the cash rate affecting changes in interest rates. In doing so, it recognised that there was still some spare capacity in the economy. So there was still some unused resources in the economy, and that further improvement in the labour market was likely to be needed for inflation to be consistent with the target. What does this section mean? What it means is that if the labour market improves, so if unemployment comes down further, that will be important in making inflation go a bit higher and reach the target band. So given this assessment, the board will be paying close attention to developments in the labour market at its upcoming meetings. So again, something that shows you how important the labour market is for the RBA's thinking on interest rates. Okay, so it's now 2:35. This has been a very quick live reaction about the interest rate decision today. Hopefully that was useful. If there are any questions, put them in the comments, and I will include a link to this statement in the description so you can go and check it out. All right, thanks for watching. Also, let me know whether this was useful, interesting, a bit rambly, all of those things useful for me to know. Okay, thanks for watching.